Hey guys, I hope you are doing well and welcome to another trading video. Today is Saturday, actually the 11th of July. The previous week has ended. I hope you've had basically good results. I uploaded, the previous video that I uploaded was about the 6th of July. We analyzed the market on this day. Today is the time to go over to the 7th of July. But just a bit of a background information. Maybe you haven't watched the previous video. So in the previous video, we were basically technically in a trading range, and with this candle, we went up. We tried to break the upper band of the trading range, but there was enough orders and push the price back, and then we have another basically fake breakout from the bottom of the trading range, and then again with this candle, again the price went back to our wide trading range, and we said something, I think, during the previous video, that when we have one fake breakout, and then we have the second fake breakout, and the price uh, is much more likely to break uh, another time when it reaches any side. So because we had the first breakout from the above, and right now that the price again got into the trading range and it is forming basically a strong, in this case, uptrend, we are very much likely that we will have a solid breakout, this time from the top band, or from the upper trading range band. And we explained our reason is that because the basically the liquidity and the orders have already been swept by this move, and because of that, and because of another signal which is forming another smaller trend inside the trading range, we are much more likely, and buyers in this case, they are much more willing and capable to break, because there are not much sell orders anymore here. So by knowing this, and as you can see here, we have the SPY, we have the channel phase, and we finally broke out the upper band. So it means that the price is now in control of the bulls, and we enter to the 7th of July. And certainly, because at the beginning it is not the Dow Jones market, and its session is New York, and the New York session hasn't opened yet, so the price is in the consolidation phase technically here. So it goes up, it goes down, it is inside this rectangle, and here the price tries to basically test the higher high. It tries and it goes down, and finally it breaks. It retraces to the basically to the broken trading range, or to this level, but it cannot form another higher high. So again it goes down. So here again we have now a smaller trading range as well. So but still it is bullish. Buyers are in control. They are just waiting for the New York session, or for the Wall Street to get open, to grab liquidity and try to form basically another movement. So one thing that I have to mention is that so far with our analysis we are good, and this time frame, which is M15, 15-minute time frame, is okay for us, because we can have enough information. We can analyze and we do have enough information to analyze. But as you can see, from this point on, we see just greenish candles and just one red candle, you know. But even before that, I mean, we want to see more information about the bulls or buyers and sellers, basically interaction in terms of reaching this higher, in terms of reaching this high. You know, we want to see how they combat with each other, and we want to see enough information. So what does that mean? It means that we have to go to a lower time frame in order to get more details. So now we switch to 5-minute chart because we couldn't understand it on the 15-minute chart. So the price goes up, it plays a little bit here, it consumes basically the resting pools, the order, sell limits, etc. And I have to mention that still the New York market hasn't opened yet. Okay, so, and what does that mean? It means that even the best setups can fail. So I have a setup here, but just because I know that it is not the right time, even I'm not even going to explain it on the video. Okay, so we just let it go. We just let it go, and this is basically when I believe from here on the New York session gets open, and we will have another higher high. Okay, it's better like to put it here. So we have another higher high, it comes down, probably it reacts to the um, moving average, and then it is going even higher. Okay, so one thing is that the New York session uh, is opened, but Wall Street basically gets open at this time. So this is the candle of Wall Street. Okay, so again, for me as a Dow Jones trader, I have to wait until the Wall Street gets open. I do not enter it before that. Okay, especially I recommend this to beginner level students as well. So guys, I mean, so far with this information, we want to analyze that how far the price can go up. And one of the tools is to basically understand the measured or equal legs. So I see one leg here, and then this is another leg, which we can see the retracement. So it shows that a lot of buyers basically exited their trades, and then on we have another one. So we expect that after the three legs we will have a kind of a major retracement. Okay, so this is one leg, this is two leg, and the third leg. Okay, so another important thing is that if I delete these measured or equal legs, when the price here goes up and forms a higher high and then comes down, and then when again it breaks this basically swing, we want what? Again, we want some sort of a stabilization above this level, because this is also our very important level before the Wall Street gets open. But when the price cannot stabilize, and this is when the Wall Street gets open, here are a lot of stops. Why? Because first of all, there were like some traders that after this big pin bar, they entered the market. Probably some of them they exited on their first TP, but some of them probably they want to get their second TP. Some of them they don't know that we are at the end of our third leg. So some people are, they basically entered the market with this breakout. So I mean, there are lots of traders, even like retail traders, that they have basically entered the market, and their stops. Some of them, their stops are below this level, even below this candle that it was hit, but most of them, it is below this swing. Okay, so here we have a swing. So as soon as the market basically grabs the stops that are below this level, look what it happens. And you can see that. So if I want to, first of all, this is our day, the lowest basically point for the day. Okay, so here, as soon as it hits, it goes down immediately. Why? Because there are no more basically buy positions here. Their stops have most of them, they have been activated. Where are the buy orders? So we should ask that. So one of the buy orders are at the beginning of this basically this trend that it has started all from it at the beginning of our first equal leg. So a lot of traders, they come here and they exit basically their trades. They close their trades, okay, which is a okay thing to do, and we should have it. We should do it too. So if you are in this trade, if you are in this sell position after hitting the stops, here is one of your exit point. And particularly it can be you can just do a partial exit. Okay, a lot of people also, you know, they like, if you want to be safe, you would put your stops like at the end of this swing. Some people, they can also go with the candle, so it depends on you. Either way, you get your first TP. And then so this is your partial exit. But as you can see, this is the beautiful really like the beauty. As you can see here, we have a kind of a doji bar, again another doji bar, and we should still wait. We should still see like which side the price wants to go. You can even do a basically risk-free. You've got your first TP, then you can put your stop loss. So I mean, like, you can risk free here, and then see whichever or which way the market goes. Either the market goes up if it has enough basically buy positions, or the sellers are still strong and they can even break this level. So with this candle, with this exact candle, we can see that the sellers are still aggressive. So with this candle, it shows us that okay, we are at least going to the today's lowest low, because this is again another point that buy positions will be. Okay, so the price comes down again, we have a bit of a retracement, a bit of basically sellers um, exited their positions. Okay, but they are so strong that even they break this level as well, and here we can see a retracement or a pullback to this level, which is very important for us. And then again they gave us another nice reddish candle. So here if you are in this trade, or if you have exited your trade here, which you must, because this is your second TP and you must then exit the rest of your trades, this is another trading opportunity. And by the way, before I put this, I need to go to the 15-minute chart again to see what is happening. So here for us, if the price wants to drop again, this break even would be very important. So now again I go to the 5-minute chart, and this was our candle. Yeah, so if I need to see, I need to see like I mean, this is the candle that we will enter with, and this should be our stop loss again behind this swing. Okay, and again you can get 1 TP until here, this break even of the 15-minute. Okay, so you can see that I mean, if I want to do it one more time for you, you can see like this would be the ideal trades that we can do, and in the sell positions we can do, and we can grab our profits very easily. Okay guys, so I hope you enjoyed it, and in the next video we will go to the 8th of July. Bye for now.